The writing really is on the wall, and there's no other way to break this down to you other than saying they're lying. They're lying to crypto holders. They're lying to retail. They're lying to you. They're lying to me. They're lying to everybody. And the question that I ask you as I start this video and show you what is going on, the question I have for you is, do you have authority and control over your own decisions, or are you influenced and swayed by headlines and other people? That could single-handedly be the most important question that you have to ask right now in this bear market. These crypto founders and Bitcoin moguls lost $116 billion in 2022. The fear and signs of potential failure in crypto space just jumps right off the page when you read that headline. The embattled cryptocurrency industry and its wealthy pioneers face a moment of reckoning after the collapse of crypto exchange FTX and hedge fund Alameda Research. Now listen, I'm not trying to sit here and say that 2022 wasn't a big year for crypto in a negative way, and the fall of Celsius, Luna, Alameda, FTX, and all of these things were good for crypto. I know they weren't good, and I know they were very bad things for the space. But put aside for a second the deceit and the lies that these scams were really made of, and just realize the kind of market that we're in. It's a bear market. And so yes, we do have these crypto moguls that have lost tons of money, whether they're part of these exchanges or not. But step outside crypto for a second and you'll see everyone has lost money in 2022. This problem is not exclusive to cryptocurrency. And the reason that you will see the headlines and the news outlets try to frame this story to you in this perspective is for one single reason. They want you to lose. You see, I was searching crypto news today because I wanted to do a video, and this is one of the headlines that I saw, and it almost immediately reminded me of a video I just saw posted earlier by Rob over at Digital Asset News. Check this clip out.
The financial giants, the smart money, what I call big money, because they're not really that smart, and they're just going to come out and just rally against it. And that's just how it's going to be for this entire bear market. And that's why it's so difficult to get through it.
Now go subscribe to Rob over there at Digital Asset News, but look at what he's talking about. Big money, and I love how he says not smart money, big money coming out against crypto. And why is that? Why is big money? Why is institutional money? Why are the headlines from these huge organizations coming out against crypto? And the answer is simple. Because crypto is so early stage, and the opportunity that lies within the cryptocurrency space as there is a massive capital shift from traditional markets into crypto, big money wants to be on the ground floor of that, pushing aside retail. And if your eyes are just open a little bit, as you see these headlines, it becomes so apparent and so obvious that this is what they're doing. Because let's look at the facts here. We see that depressing headline, how Bitcoin moguls and crypto founders have lost $116 billion in 2022. It makes crypto look like a failure. But guess what? Elon Musk lost $123 billion himself in 2022. Warren Buffett, the apparent greatest investor of all time, down $2.7 billion. Bill Gates, $27.3 billion. Sergey Brin over at Google, $38.1 billion, because its advertising business didn't meet targets. The famous Jeff Bezos over at Amazon, $65.7 billion. So again, this is not exclusive to the cryptocurrency space. So many crypto holders out there right now, I know, they feel like they're unwise or they're foolish because they've invested in crypto. Crypto's down so much. But this is a reminder. The top billionaires, the most world famous investors that are out there, they're down this year as well. But there's one thing that most of these people know that most of retail does not know, or they're too scared to pay attention to. History shows investors who buy during bear markets will likely see huge gains. Buying when stocks are in a bear market is generally a good strategy, Ben Carlson said. I know every correction feels like it's going to be the end of the world, but most of the time the world does not in fact come to an end. Even if you have to eat some further losses, buying stocks after they have already fallen 20% has led to nice returns historically. And for context to that quote, S&P 500 down right now around 20% during this bear market. But this isn't just my opinion or what I'm seeing from the outside or guessing from the outside looking in. This is really what's happening. Big institutional investors are buying while retail investors are dumping stock funds and ETFs. And the sad and harsh truth of it all, the behavior of retail investors is a good contrarian indicator. Institutions have a longer term investment horizon than the typical retail investor. So it's encouraging that they, on balance, are not only buying the shares which retail investors are unloading, but investing even more. The lack of patience that retail has and the way in which most retail investors are swayed and influenced by simple surface headlines against cryptocurrency is setting up retail to miss the biggest opportunity in recent years. Retail investors have much shorter investment horizon than institutional investors and are far more reactive. And this applies to crypto holders, I would say, even more. In this volatile, unknown, early stage space, we see the attention span of crypto investors very, very short-sighted. And this is why the behavior of retail investors is such a good contrarian indicator. They will be maximally bearish at market bottoms and maximally bullish at market tops. And as somebody that has been doing YouTube videos almost every day for 5 years as it relates to crypto, this is exactly what I see in the comments. It is obvious that people buy the hype and buy the top of bull markets and they sell the fear, selling at the bottom of bear markets. The contrasting behavior of retail and institutional investors is the source of Warren Buffett's famous line, "The stock market is a device to transfer money from the impatient to the patient." And so often I sit here and I do these videos on YouTube talking about crypto, talking about the bear cycles, the bull cycles, talking about on-chain analytics, and we're tracking so many different data points. But really, it is so simple. And this is a pattern that continues to repeat itself. The winners in all markets are the ones who can buckle in tight and make it through the volatile waters of the bear markets. The ones who are patient, the ones who come up with their own plan, the ones who are not influenced by outside forces and other people, the ones who don't get emotional when fear is all around them. To me, it really is that simple. And outside of all of that, it's just a game of patience. Leave a comment below. How are you feeling out there? Do you have the patience to withstand the rest of this bear market? I appreciate you. Hit the subscribe, hit the like. I'll see you in the next video. God bless.